Unlock your trading edge for October 8, 2025. With our deep dive into today's most critical candlestick signals, this expert market analysis delivers a full breakdown of intraday and daily formations across every sector and industry. We will highlight key technical patterns by market capitalization, quantify the battle between bullish and bearish trends, and pinpoint undervalued or overvalued opportunities using confirmed duration measures for every single candlestick reading. The market concluded today's session with a cautiously bullish sentiment, characterized by a noticeable increase in volume within mid-cap sectors, even as the total market value experienced a slight contraction. This dynamic points towards rotational flows, where capital is moving between sectors rather than broad speculative buying across the board. Major indices are now approaching significant resistance levels, with the visible formation of bullish engulfing candles and rounded bottoms, suggesting that the current uptrend, while fragile, may have the momentum to continue. Turning our attention to the technology sector, we witnessed a powerful display of bullish strength. The sector led the market with a remarkable gain of 5.2%, which translates to a market capitalization increase of approximately $65 billion. This rally was primarily driven by the software and semiconductor sub-industries, both of which posted impressive gains of nearly 6%. A prominent bullish engulfing pattern was confirmed on the daily chart. This powerful pattern forms when a large green candle completely engulfs the body of the previous, at a day's smaller red candle, indicating that buyers have aggressively stepped in and overpowered the sellers, often signaling a reversal of a short-term downtrend or a continuation of a larger uptrend. The technology sector has been building this positive momentum for several weeks, and this pattern reinforces the likelihood that the upward trajectory will persist, with the potential to test new highs in the coming sessions. Moving on to the basic materials sector, we observed significant bullish activity, particularly within the 30-minute timeframes. The sector achieved a solid increase of 4.1%, adding about $32 billion to its total market capitalization. Key drivers were stocks in the mining and specialty chemicals industries. The most significant pattern identified was the bullish Marubozu, which appeared multiple times on the 30-minute charts during the midday trading session between 11 a.m. and 1 p.m. Eastern Standard Time. A bullish Marubozu is a long green candle with no upper or lower wicks or shadows. Its formation signifies that buyers were in complete control from the open to the close of that period, with the price closing at its absolute high. This indicates extremely strong buying pressure and suggests continued upward momentum. This pattern confirms that the sector is in a fair value range with strong underlying demand. Next, we'll examine the consumer discretionary sector, which showed signs of being overvalued despite some bullish signals. The sector registered a modest gain of 2.5%, corresponding to a market cap change of $40 billion. Large cap retail and automotive stocks were the main contributors. On the 15-minute charts, we noted the formation of several bullish hammer patterns, especially during the morning session's low around 10 a.m. Eastern Standard Time. A hammer is characterized by a small body at the top of the trading range and a long lower wick that is at least twice the size of the body. This pattern indicates that sellers pushed the price down significantly, but buyers then stepped in with enough force to drive the price back up to close near its opening level. While a bullish signal, its appearance on a short-term 15-minute chart within an overvalued sector suggests that any upward moves may be temporary and should be approached with caution. In contrast, the financial sector displayed early warning signs of a potential downturn. The sector ended the day down by 1.8%, reflecting a market capitalization decrease of $25 billion. The weakness was most apparent in large and mid-cap banks. Analysis of the 15-minute intervals revealed a number of bearish Marubozu and shooting star patterns, particularly in the final hours of trading after 2:30 p.m. Eastern Standard Time. A bearish Marubozu is a long red candle with no wicks, indicating that sellers controlled the price from the period's open to its close, signaling intense selling pressure. The shooting star is an inversion of the hammer. It has a small body at the bottom and a long upper wick. This pattern suggests that buyers initially pushed prices higher, but sellers took over and forced the price back down, indicating a potential reversal at a resistance level. These short-term bearish signals in a slightly overvalued sector warrant close monitoring for a potential trend change. Today's comprehensive candlestick analysis reveals a market with distinct pockets of strength and weakness. The technology and basic materials sectors are demonstrating substantial bullish momentum, especially among large-cap stocks, as identified on daily and 30-minute candlestick charts. Our confirmed duration measures highlight that technology names, particularly in the software and semiconductor industries, are appearing slightly undervalued among their large-cap peers, making them compelling candidates for further consideration. Conversely, the financial sector is flashing more bearish formations, and caution is warranted as these patterns coincide with a shift towards overvaluation. By navigating these signals with clear duration markers and a sector-by-sector breakdown, you can make more informed and actionable decisions. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.